This is a course that I've designed over the last 4 years of personal trading, coaching, and realizing that, at the end of the day, after all the research that it comes down to, whether you're using Fibonacci's support and how it normally goes is support and resistance. And then once you learn support and resistance, they tell you to use Fibonacci's. And then once you kind of learn that, they say you need to learn candles. And once you learn candles, they tell you you need to learn patterns. And then once you learn patterns, you circle back to support and resistance. And then they can call fair value gaps, which are just support and resistance areas that had higher explosions. Then there's order blocks, which are just basically orders that came in that were ordered on an area that most people in retail place an order on because they were support or resistance, right? So all these terminologies and everything that you're learning, it's literally the same thing. Whether then it's you have gamma fans that kind of circle around, give you a beautiful array on your chart. But at the end of the day, what they're really doing is just using the supply, demand, and order blocks areas as areas to see where the majority of pullbacks, volumes, price action happen to relocate. Then you have the Elliott waves. Elliott waves are simply kind of more of a simplistic breakdown of what most traders learn, which is you have to find a trade, wait for confirmation of trade, and then you enter on the retest, which is normally Elliott wave 1 is a breakout, Elliott wave 2 is the retest, Elliott wave 3 is normally the biggest wave that you want to get into and basically make a trade. So once you understand that Crypto 101 has been a process of tons and tons of information just redesigned, renamed, and kind of like regurgitated to create a bunch of ways to do the same thing. So this is important to understand because what happens is once you understand that, then you're going to know that this is why everything works, right? Or you'll see where things happen and things work and you go, man, that really worked. Well, the masses of traders, which are retail investors, they're all learning the same steps. So if they're all learning the same steps, whether it's called Elliott wave, support and resistance, whatever, order blocks, whatever, you guys are all going to be buying at the same time, right? So you're going to look for a breakout. You're going to look for a retest. You're going to put your orders on support and resistance areas or retest areas. And that's where you see these fluctuations of orders that happen. And that's why it seems to be such, theoretically a good way to trade. So what you have to understand is that everyone knows what retail investors are going to do. So now you have to understand that what you need to learn is the market maker system, which is the people who control the biggest amounts of money, who use the knowledge that they know you're going to enter on bull flags, you're going to enter on support, you're going to enter on resistance, you're going to wait for a retest. They know everything that triggers your reason to buy, and they use that against you to get better entries, push a market down, get better, profit margins. They use this all against you because they have the amounts of money it takes to maneuver and move a market, right? And you're up against it in the crypto market because it is a way more easier market to manipulate because there is no companies. There are no return on investments for companies. There's no POL, there's no profits and losses, there's no CEO talking about news. A lot of these cryptos are just cryptos. I mean, there's a couple of them out there with companies attached to them like XRP, which when you have news, data, and signings, and the XRP army has so many things, the red folder, this folder, find a new bank, Trump is doing this with so this can cause fluctuations in your coin, but then it goes right back. And market makers know how to use this as well to basically turn it into profit on these areas. But the majority of crypto is going to be basically, the good news is it's going to be controlled by retail investors. So when you learn the systems that are designed to understand and work within the moneymaker system and learn how to execute on all the things that you know, the difference between everyone else is that everyone knows the same information. Everybody knows Trading 101. There's a million gurus on TikTok explaining support and resistance. What they don't explain is how to execute at a higher percentage in law of average. You have to increase your law of average of winning, and you have to increase the law of average by finding the fine-tuning things that basically we call them rules, checklists, that allow you to get into trades that are more highly profitable or have a higher percentage, meaning the law of average has a higher law of average of winning versus doing it just normally. So you have to add little things, and we call them confirmations. So we created an indicator called the moon indicator, and the moon indicator is a volume indicator, because at the end of the day, what it comes down to, just like we have on our chart here, is strategies, right? And the main thing is here, Trading Course 102, rule number 1, volume is king. I don't care if there's a bull flag, a bull pennant, support at the bottom, this, that, the news, blah, blah, blah. If there is no volume, there is no up, right? Then it goes down. That's the bottom line. No money, no up, right? No money, no up. All right. Number 2, our rules is follow the 1, 2, 3 method, right? This is simply a method that incorporates all the different styles out there. Elliott wave 1, pullback, Elliott wave 3 up. Breakout, retest, all the way up. When you are focusing on the 1, 2, 3 method, then it allows you, when you see a breakout, not to FOMO in, but it reminds you that there's always going to be a number 2 pullback, and that's where you need to be focusing on getting into the trade so that you can get the third leg up, right? Third leg means, the third move up, or the Elliott wave 3, which is the biggest wave of the 3 Elliots, or just a retest, meaning a breakout, a retest, and then a go, right? The reason why the third move out and using the 1, 2, 3 method is so big is because the majority, probably 95% of trading strategies hinder on the fact that there has to be a move and a retest, and the entry is always on that support and the retest area for 80 to 90% of traders. So by trading that one, remembering that one method, you're going to be trading with the majority of traders. Now, the difference is, it doesn't mean you're going to be successful in your trade, because like I said, what's the first rule of Trading Course 102? Volume is king. So if there's no volume and no money, then there's no long. So it doesn't matter how all that plays out. If you're entering a trade that doesn't have money behind it, then you're not going to make money. You're putting the odds against you, so your percentage or your law of average of winning is going to be lower than someone who waits for the volume or money to be higher, which allows them to get into a trade that has a higher probability of winning, right? So what we're going to teach you in Trading Course 102 is simply to learn how to put yourself in the majority of possibilities of being successful, meaning increasing your law of average by increasing your law of average into possibility of winning, meaning a higher success rate of probability trades will give you a higher success rate of success. So that's really how simple it is, right? So this is what we're going to do here, is cover the basics. So today we're just doing an introduction here to the course, the rules, and then a little bit of the strategy. We're going to come back tomorrow. Today we're just kind of opening it up to the floor so that people who are out there looking to get in the course, looking to sign up, looking to take a course, can get some information on how to, at least start understanding how to become a better trader. So these are the rules right here. There's 3 rules. Very simple. Volume is king. Follow the 1, 2, 3 method. And then rule number 3. It's the best rule out there. It's very simple. If it doesn't do what it's supposed to do, then we know what it will do. What that simply means is that if the pattern says bull, if the movement says it's going up, if the trend is up, if all these things say that it's going to be a long, but then you see where it's supposed to have a really, like the third move is supposed to be big, but it fails and the volume is starting, the money's starting to go away, that all tells you that the trade that you believe is supposed to happen isn't happening, and you will be able to say to yourself, wow, this is going to go the other direction, which will allow you to get into a trade or not get into the trade that's not going to work, or go into a different trade, the opposite, which is shorting, and make money on the short or the pullback. Now, if you don't know how to short, that's fine. You definitely want to learn it, because I will tell you right now in Trading Course 102, I will explain to you that the number one way to make money in crypto is shorting. Okay, it will always be that way. The reason why is very simple, is because it's hard to know how much money will go into a coin, but 100% of the time, once the whales, the market makers, hit their profit targets, they will sell. Once retail investors have made their money, they will sell. So no matter what goes up will come down. Okay? And XRP is one of the easiest way to confirm that, because the XRP army, they never sell. Okay, all they do is hodl. I got guys who've got $200,000-$300,000 worth of XRP, and they will not. And I got them in XRP at 25 cents. Even at $3, they wouldn't sell. Okay, they won't sell. Right? People who believe in XRP hold it. XRP has the strongest army out there. So if XRP can go from $3 to $1.18, while all the people who hold it are still holding it, that just lets you know the power of shorting, the power of profits. It doesn't matter. The coin has to come back down. Why? Because it doesn't have anything that it sells. It doesn't have profit and loss. There is no products. There is no CEOs. There are no companies selling things for XRP. It has no utility. All right? It's just a coin. So it goes up based on people buying it, and it comes down once they hit their profit target. That is it. So remember that. Shorting will always be the best way to make money in crypto. Guaranteed. Okay? If you would have been shorting XRP over the last 5 years, you would have made $3-4 million already. Holding it, you're still at 100,000. That's just a reality. All right, so now, these are the fundamentals of Trading Course 102. Pretty simple, pretty basic, right to the point. This is what you have to focus on. So now that we understand the rules, we're going to cover strategies. This is very important, because once you understand, you have to put a strategy together so that you can follow it, meaning it's like baking a cake. There's a cup of flour, quarter cup of butter, 1 pinch of salt. You just can't go in there changing the ingredients and the amounts and think you're going to get a good cake. It's just like baking. So strategy number 1 is the trade. What do you do? How do you find it? And what makes a trade go on your radar, right? And we'll just use simple things like support and resistance for this in the beginning, until as we start to have people come on and explain how they track a trade or what trade they're looking for. And then strategy number 2 is the entry to the trade. How are you going to enter the trade once you find a pattern or support and resistance or a breakout or whatever it is that triggers you to make a trade? How do you enter that trade is another strategy. What time frames do you use, right? When you find a trade, are you looking on the 4-hour, the daily, the 2-hour, the 1 hour, the 15-minute? When you enter a trade, what time frames are you using to enter? How are you entering? Are you using the Fibonacci's? Are you doing the second level of resistance or support? Are you catching the pullback? So many different strategies to enter a trade. And then finally, a system. This is the most important part, right? The system is, once you have a strategy in a trade, you will receive information. And this is what people never teach you, and I'm going to teach you, all right? So this is why this course right here that you're about to learn is a 10-year trading system that I built a long time ago that taught professional traders how to lose 50% less and win 50% more. And it's very simple. It's all mathematical equations, and it's all based on simplicity, right? It's all numbers. So to make your system, you need data. Data is how we're going to break down how you trade, how to increase your wins, and how to decrease your losses, and how to find the perfect formula of amount of money per trade equaling amount of profits per trade equaling weekly, monthly, yearly goals for financial freedom. So that is the most important thing you will learn in this entire course. That right there is worth, I mean, if you can learn how to make $100,000 a year trading $1,000, you could easily pay $20,000 for someone to show you how to make 100,000, right? And if you wouldn't, then you're probably not a trader anyways, because it takes risk and reward to be a good trader. And at the end of the day, you have to understand mathematics to be a very good trader. So that is going to be the key to the entire course, is going to be the system. What size bag? How much my leverage? What's my multiplier? How many trades do I do? What's my target? Where's my profit at? How do I get my entry? How to understand setting up the greediest entry, right? Most people tell you greed is basically watching a coin go up and you keep holding it. That's not greedy, that's stupidity, right? Greediness comes on the entry. The guy who makes the most money is the guy who buys everything the cheapest and then sells it for the most, okay? Let that sink in. The guy who makes the most money is the guy who paid the least for the item and sells it, right? Even if you both sell it for the same price, he still makes more than you because he bought it cheaper than you. Do you understand? This is all mathematics. Very easy to understand, very easy to compute in your head. Appreciate you, Gwen. And so this is where you have to kind of like put yourself in there. What up, George? And really dig into understanding how to make this work for you. So that's what we're going to focus on. So those are things that we're going to get into, and we're going to move through this, but that's the breakdown of Trading Course 102. The fundamentals of making yourself better and equipping yourself with the mentality of a trader to be successful, right? You have to have the brain of a trader to be successful in trading. So I hope that makes sense to you. And then there'll be more videos and more things that you can follow, but that's where you have to start, guys. So that's what we're going to have in the VCCryptonation Trading 102 course. So I hope that makes it easy for you to understand. Good luck. God bless. We look forward to getting into more videos with you. So when you hear what we're going to cover here, right? Kind of like the simplicity. How long you been trading, Dre?
Man, it's been a while. You know, my problem is I haven't been consistent. So.
Okay. Well, that's most people.
Yeah, no. I'm now starting to get to a point, you know, with my career to where I can get time, because it was just monopolizing my time, and you know, I couldn't get consistent. So now I'm in a space to where I can be consistent. So that's why I'm like, cool. Let's do it.
Let's do it, right? So let's kind of do a breakdown where, all right, so what we just covered in the Trading Course 102, right? 3 easy rules. Volume is king, because that is going to basically let you know the truth. It's either up or down, period. Number 2, follow the 1, 2, 3 method, meaning don't chase. There's always a pullback, get a better entry, and the third leg is always the biggest move up, right? And then rule number 3 is if it doesn't do what it's supposed to do, then we know what it's going to do, the opposite, right? That makes sense?
Yeah. Yep.
I mean, so these, when you have these, the whole point of these rules is really to get rid of the anxiety, right? Kind of get rid of the uncertainty, right? Because a lot of times there's trades happening, and I think what happens to a lot of people, it's all emotional, and you end up where you see something happening and it becomes a gut feeling versus walking yourself through the correct way, a strategy of how you want to enter what's happening currently, right? Not having that plan, that set strategy every single time, that you know this is what you're going to do, this is how you're going to do it, and then just let it do what it does. And then collect the data from it and go, okay, I was right, or I was semi-right, or I need to figure out how to make this strategy better, right? Because a lot of times I think when things explode, like you see the candle starting to move and people are like, oh, this is going. And then you'll see people be like, oh man, get on Doge, it's going crazy. And then you'll see a pump and then everyone jumps in and what happens? It goes the other way.
And then they start to sell all that profit off that everyone got excited about.
Right. So that's what I think, the majority of it's going to come down to is people having the moment where they stop FOMOing, where they don't let anxiety and emotions take over their decision making, right? Where they make a decision based on it's like having a job. You know what I mean? You go into work, and if your job is to do something, there's a workflow. And your job is to follow the workflow. That's it. Now, we all been in jobs where we said, this is a shitty workflow. But they pay me to do it, so I do it. We don't reinvent the wheel, we push it. Very simple. And I think in crypto, people spend a lot of their time trying to reinvent the wheel instead of first, putting the wheel on correctly. Like, drive the wheel first, and then, you can sharpen your tools here and there, but you have to have data and you got to collect stuff. And the only way to do that is to have a like a system, right? A strategy. Okay, I do this, and then I look for this, this, and this. And when that happens, I then decide I'm going to take a trade. So then my next steps are this, this, and this. And then you set it up, and then you collect the data. How much did it win? How much did it lose, right? How much did it go up? How much did it go down, right? And then once you have that data, then you can put yourself in a position to actually analyze the data and then decide like, okay, now that I have all this here, what do I do, right? And that's where we have the 10 trade review, okay? And what that comes down to is just basically data, right? It's very simple data, right? So what we need here, number one, is what percent did it go down from my entry? Number two is the percent it went up total. And these two things are very important because what it does is it allows us to be in a situation to analyze what we do, right? So if we have a strategy, right, and in this strategy we do something very simple, right, and it goes like this, right? So kind of like this. So trades. Okay, number one trade. After my entry, it went down 2% down, and it went up 2%. Trade number two, 3% down, 2% up. My third trade, I had 1.5% down, and I had a 1% up. My fourth trade, 2.5% down, 1% up. And my fifth trade, let's say I have a 1% down and a 3% up, right? Now we'll just do 5 trades here. But what I can do here is I can look at this data, and from this data, I can get information, right? So what I see here is if someone was doing this particular trades, and I look at there and I say, okay, down is 2, 3, 1.5, 2.5, 1, right? So if we kind of made this a 10 trade, more than likely it would be, it would have 2% down, 1.5% down, right? And we can see that on average, 7 out of 10 trades went at least 1.5% on average down. So we have a 1.5% down move from entry. And then I can see here that my up percentages are 2%, 2%, 1%, 1%, 3%. So I have an average of 2.5% up, right? Now, two things this does for me is that, one, this is how I'm going to correct the things that I do. For instance, if this was happening and I looked at it and I said, okay, off of this, I'm going to tell you that you need to adjust your entry. And wherever your entry is, whatever you put it at, right, you're going to move it down 1% down every time. And what that looks like is this. So we were on a chart and I was in the area and I said, okay, here I am. I'm going to get into a trade here. So let's say that we have a trade here and for instance, XRP looks like a good trade. We're actually getting into an XRP long now. So let's say I'm looking at XRP. I decide based on whatever my strategy is that I'm about to enter. I go to my entry strategy, which is normally going to be breaking down the current cluster or parallel channel or support and resistance areas. And I go here and I go, okay, this is my current support and resistance areas right here. And this is what I'm looking for. And I'm going to set my trade. And you go ahead and say, okay, I'm going to enter, let's say your entry is going to be right there. Okay. Now, you already know that normally when you do this, there's about a 1% move to the downside that normally happens. So all you do is just take where you're going to enter and then move that down 1%. And now that, and you just use the long tool, right? Just use the long tool. Doesn't have to be perfect. This right here is a 1% down right there. So make it slightly less than that, like 0.98. And then what I'm going to do here is just going to move my entry there. And now that I've done that, my new entry, instead of being up here at 135.81, I now do a limit order at 134.60. That makes sense?
It makes sense, but my question to you is, what made you put the parallel lines in that location?
Well, that's going to be support and resistance, right? So that's kind of the strategy of, like, we'll get into that, of how we do an entry. But what I want to do here is just, once you have a strategy of how you're going to enter, and we get data on the importance of actually doing 10 trade reviews is to understand why we need those reviews. Because once we get the data, then we can make adjustments to that data to increase gains and limit losses, right? So based on this, let's say that you have this and you say your support is the 135.77, and you go ahead and mark that off and you go 1% down. And now what you do is you move your entry down to that lower 1%, because normally after you do an entry, out of the 10 trades that you do, 7 times it normally does pull back further than you think. See what I'm saying?
Got it. Yep.
Now what's going to happen is when that trade does pull back to that level, you are now starting out when it pulls back with a 1% gain already. Because when it goes back to its normal location, which is basically where you were going to enter anyways, you are now up 1% instead of being negative 1%. See what I'm saying?
Yeah, that makes sense.
So if you're averaging 2% on each move, or 1.5%, what that means is this 1%, 1.5% here is now going to be what your normal is. So it's going to actually be 3.5% because you've gained 1% on your entry. See what I'm saying?
Yeah.
Now, worst case scenario, we cut this in half. We go back down to 1.5% because we want to work on the rule of 50-50. You see what I'm saying?
Yeah.
50-50 allows you to create a system, which we'll get in later, that will be based on how much money you should be trading, how much leverage you should be using, and how to increase your gains. So in this scenario, let's say that we are doing a normal trade, right? Because theoretically, you want to get to the point where you're doing a $1,000 trade. You want to be using a leverage of 10x. And you want to average 20% per trade, which would be equivalent to getting 15% gains, which is equal to $150 per trade, right? So now what this does for you is that if it only goes back to its original area where you kind of were getting in, you're already up 1%, which is equivalent to 10. And if it does 25% of what you thought it was going to do, your average, that'll give you another 10. That'll give you your 20%, which will be equivalent to $150. See what I'm saying?
Right.
So now you have a basic formula that you can test, right? Now we know that as you get better, the gains are going to get better. This 150 is going to become 300, right? But if you make 10 of these trades, it's $1,500 minimum. Remember, because we're working with worst case scenarios, not the good scenarios, not the super scenarios. This is just breaking. This is you having a trade that breaks up to almost where your original entry would have been. That makes sense?
Yeah, it makes sense. It's just a matter of, you just have to learn where that entry is to set that proper.
Yeah. So that's where we got to build strategies.
Yeah. But the strategy itself definitely makes sense. It's simple.
Yeah, because the first thing you got to do is, before you build a strategy, because that's kind of the hardest thing to do, because you have so many different ways to trade that you're going to be working on a strategy for the majority of the time, piecing together till you find how it clicks for you, right? But by using this simple format in the beginning, by giving yourself a trader's mentality, right? So like poker, right? I'm a no limit playing poker guy, right? And I'm very successful at playing poker. And people, and this is what I do. It's pretty funny. Is that I'm very aggressive all the time, and I'm in almost every pot. And people are always like, they think that I'm loose, and they think that I'm just out there. What they don't realize is that I'm mathematically giving myself higher odds of getting lucky, and giving myself higher odds of controlling what you think of me. But what I'm really doing is, if it's cheap to get in and be in, I'm limiting how I lose, so that when I have a hand, I maximize my gains. You see what I'm saying? I might be in every hand, but I'm not going to push a hand that doesn't have the probability to win. But they can't see that because I'm in. But when I do push back, they think I'm bluffing, and that's when I get them. So in poker, it's okay to lose 6 out of 10 hands, as long as you're only losing a small amount, because you only need one pot to double up. You see what I'm saying?
Yeah.
So in this scenario here, it's the same thing. If you limit your losses, right? The beauty of moving your entry down here, right? So here's your entry here. It goes down 1%. You're kind of stuck down here, and it has to run. But if you're already moving your entry down 1% and going with what you normally pull back, you're already improving your odds of winning by 50%, because your stop loss is normally going to be at a 2% mark anyways. So what you did here is you simply doubled your ability to actually be successful. Now the other thing is that when this starts to run and it starts to fight up here, you've already hit your target, which means you can move your stop loss up, but this allows you to hold it longer to see if it'll break out for you because you have that extra gains. So the times that it's kind of going up and down where most people are like, oh, I'm only up 20% and they have to kind of like, close out and not take the risk. In this scenario, you'll be up an extra 20% that you can take the risk. And, 5 out of 10 times that'll turn into an extra 40 to 60%, which the other people don't get. That makes sense?
Yep.
So the first thing you have to do while you're building a strategy and you're building your sweet zone entries is you have to first understand how to lose and protect your assets so that when you do have the best hand, you're doubling your bag. That make sense?
Yeah, it does. Now, VC, if I'm jumping ahead, let me know. Would you say there's a different strategy for different time frames?
So I would say they're all the same. The difference is your entries, right? The only thing that changes with time frames isn't the strategy, it's the system, right? Bigger time frames means bigger movements, right? So when you're on lower time frames, you're working with 1%, 1.5%, and 0.5% type moves to up to 2%. When you're dealing with bigger time frames, it becomes 2, 4, and 6%. So what happens is it's not the strategy that changes, it's the system. And remember, the system is the size of the bag and the leverage that you're using. Because bigger time frames means you have to give more room. If you're not good with your entries right away, you have to give more room for the pullback. You see what I'm saying?
Strategy's the same. System just changes based off of
size of bag and leverage.
Yeah. Okay, cool.
That's the difference. But that's a great question because that's probably 90% of the reason people lose. Because they don't understand.
To answer your question in the beginning, how long I've been trading. I've been trading for years, man. You know me for a while now, and like I said, I haven't been able to be consistent because of just my inability to have time, to dedicate to it. And I know you've always had a system, and I'm at a point to where I accept take emotion out the damn equation and learn
you got to.
the system. You know, I am like, okay, let me fit, and I know it's always been improving. I'm just like, let me learn this system. That way I can just apply it. I'm not Mr. Moneybags, but shit, I'm grateful enough to where I can start playing with these $1,000 bags. You know what I mean? So, after I learn the system, of course.
And that's a perfect. I mean, this is why we're doing this because, I've adjusted this course probably 10 times over the last 5 years, and the reason why I do one-on-ones and the reason why I bring people up and I do the courses like this is because it's trying to find the thing that's missing between the understanding of what I'm saying, right? And what you just said is exactly why everyone loses. It's they have an emotional trade, and you can go with your gut and you go with your feelings. Some of us are very lucky. Some of us have a great ability of intuition, but you still have to have steps and a system that you can follow so that you have, checkpoints and checklists that protect you from things that you might not see or things that are probable to happen. And that's why having the system is so important, because you can't go back and say, if I asked you on the last 10 trades you did emotionally, I say, well, what made you get that trade? And you say, I just felt good. I can't measure that, and I can't dissect that, and I can't find what was wrong with that. You see what I'm saying? But when you have a system and you follow certain steps, then we can fix those steps. We can sharpen those tools. We can find the errors in the steps. We can create better steps, right? With emotions, you're just winging it. You know what I'm saying?
Yeah.
There's no
Yep.
data to cross-reference why it worked or why it didn't work, right? And we want to be in the game of law of average, right? The law of average. Have you ever heard of the law of average?
Yes.
Yeah. So the law of average is basically it's like a law of the universe. Like something happens more times than not. And when you find the law of average and you put percentages in your favor, then you're starting the game out with the cheat code. You're starting in the winning side because you're doing it at least on the higher percentile of success. And then you have to start finding all the little cheat codes that increase your success percentage. And then once you reach your maximum or a good level, then you have to start mathematics. That's the beauty of leverage, right? The beauty of leverage is it's not like we're all sitting here making trades and the coin has to do 50% move or a 20% move for us to make 20%. I mean, it only has to make a 0.5% move for us to make 25% if we're doing 100x. You see what I'm saying?
Yeah.
We now have tools that allow us to get 20% on a coin when it only moves 1% of what we needed to do. Like that's like crazy. If someone said, "Hey man, you're going to make $1 million and you're only going to need 1% to do it," huh? Those are great odds.
Yeah.
Like we already have the greatest odds in our favor. So when people try to cheat that, I'm like, you're. That's like. That's like being in God mode and then still trying to make something better. Like, huh? Like there is no better. You already have it's already here. You just have to execute, man. You just got to do what you're supposed to do. It's all in front of you. There's nothing more to it. And that's where the emotions, that's where all these things come into play, and that's why people fail. Because of that madness. And that's what we have to do. We have to take that. We have to remove that and then just trade on, just like a job. This is what I do. It's a workflow. This is how it works. And then collect the data and then build something in that data, something in that format, something that fits that data. Then we can, improve that. When something, I need a better entry. Okay, let me do this, right? We'll be able to do it because we know what we're doing. And that's the mindset. So the very first part of getting into everything is really coming down to is creating the understanding of the mindset of a trader, like how to understand how to be profitable, how to be a profitable trader, steps and rules to follow to ensure that you're going to be a profitable trader. Put the percentages in the law of average in your favor so that winning is more profitable than losing. Once you do all that, then you put yourself in a place where success is more likely to happen, right? You don't want to, that's why when people do things, I'm like, why are you doing something that has a 70% chance of loss? Like, that's gambling. I want to be in something that has a 70 to 80% chance of winning. Then I want the odds in my favor. Otherwise, why would I do it? Don't make any sense, right? What they say, work harder, or saying people work harder, not smarter. Work smarter, not harder, right? Yeah. Why would you do something that has a higher risk of loss, right? You got to first put all the percentages and everything in your favor so that when you start the game, you already have the advantage. That's how to win. And that's what Trading 102 is is that everyone's already been around. Like you, how many different systems have you gone, right? I mean, have you tried? Like, what have you learned? So you've learned the Elliott waves, the gamma fans. What's some of the systems that you've been out there like looking at? What's the most people like teach as you've been out there for the last 5 years? What's the common theme?
Uh, you know, I be honest with you. I try not to pay attention to a whole lot of other people's stuff because a lot of stuff out there is bullshit. And it just and and you learn this bullshit because I'm like, nah, man. VC says this, and I know it's legit because I see this shit, and then I've seen his, but they're just talking. So I'll be honest with you. I stay off of YouTube's. I stay off of a lot of other TikToks as far as learning because they're full of it, and they're always trying to sell you something. So me looking at the stuff that you have, I've looked at when you first introduced the Elliott waves. I was like, oh, okay. And then the first leg, then the second leg, or excuse me, first wave, second wave, third wave. That kind of clicked with me real quick. But again, due to lack of time, I kind of fell off of it. So long answer, short. I stay off of other people's stuff, to be honest with you.
Which is, I mean, because that's why we started. Right now, what I've done is because I realize people are always trying to learn. So I'm like, listen. That's why I got rid of the academy. It's because we had trades that we did that were very specific, and I'm like, you know what? Let's just get to a point where we're going to take a system, right? And we're going to use one indicator, and this one indicator will just be a confirmation. It's just the value. That's it. So the moon indicator is simply the money, right? So it doesn't matter whether you're learning the Elliott wave system or someone's teaching support and resistance or order blocks or, I mean, there's so many different, ways to do one thing. You can just, track it, find it, and then go, okay, what does the moon say, right? And then that just gives you that one little, thing to kind of like, at least it'll clean up 50% of the bad decisions, right? And that's where you can start building something. And that's really what I wanted to get. That's why you see me in the Discord. I'm putting YouTube channels of strategies or people posting, the best futures trader or whatever. I'm looking at the videos and then we're dissecting the videos because, this is, if people really have the best system, then they'd be willing to put it up against every system, right? And I'm willing to put my strategies up against every system out there or show people how to make their strategy better. It doesn't really matter. The whole goal is to find ways to help people get better at what they're doing so that they can be successful, right? The one thing in life is that if you pay it forward and you constantly give to the world will always give back, right? You don't want to be the person that needs the world to help you. You want to create what they say. Don't worry about luck, create your own luck. Create your own luck by being the person that's constantly giving so the world owes you. You know what I mean? When the world owes you, then you can collect whatever you want because you're just racking up a tab, right? The people who don't give back and the people, it's like you see very wealthy people go through very tough times and you're like, man, but then you realize they don't really do anything when they have all that. They don't ever do anything to help anybody. And it's like the one thing I learned about the world, and the reason why I like trading so much is because the charts are just like reality. There's like the RSI, there's a bottom and a top. And at the end of the day, the charts go up and down. And it's always going to be the same in life. It's a roller coaster. If you're at the bottom, it doesn't matter if you're at the bottom, eventually you have to go up. And when you get to the up, eventually you're going to come back down, right? The goal is to find a way to, when you're at the bottom and all those, you can only take so much shit, and eventually the world owes you something because you've been going through such a rough time that when you get that lift, that's your opportunity to give back and try to find ways to help others up so that when it comes back around, the world, when it's time to take you down, the world goes, oh, I owe you. and then you go up even more, and you stay in a level position where you don't have to worry about huge fluctuations. That's where people don't understand. Life's the same way. You don't want the world to take from you, because the world will take whatever it wants. You want to dictate what you give it, right? So always give, always help. Go out your way, do things, and just be. I mean, it's not hard to have humanity. You know what I'm saying? So you just want to dictate your life to where you're doing good stuff, so that good things happen for you, right? And things go well. It's like, oh, like cool, that helped out, where you don't have to worry about it, right? And the charts are the same way. But that's where we're at right now. Is just I like hearing and seeing systems that people use and try, because we want to see that. We want to go into that system, see what it is, and then add to it and say, oh, well, just add this and this will be even better. Because you'll never know. We might stumble across the greatest combination. I mean, you don't find peanut butter and chocolate unless you mix things. You know what I'm saying? You gotta go out there, and you gotta like be willing to, find things, right? Like I always tell people, the smartest guy in the room is the guy who knows he's not the smartest guy in the room, right? Always listening, always learning. It doesn't matter if the person's never been in trading or a person's never been in marketing or sales. I've always listened to the person. Like I used to do interviews, and I wrote an entire sales book for major companies, and most of the stuff came from listening to people that I took on interviews and showed them our system. And then their question was like, well, why don't you do this? And it was so weird, because what they really were saying is, this makes sense to me. And if it makes sense to people outside the box, then that makes sense to the majority of the people. So you always got to find what people understand. That's why we do the course, where we interact, is because it's trying to find the verbiage. It's trying to find the way to explain something. It's always trying to find the easiest way where the majority of people will go, oh, I get it. If I explain the Elliott waves 100 different ways, people would be like, oh, the Elliott waves. But if I say, listen, we just want a 1, 2, 3, then people are like, oh, I can do a 1, 2, 3. They don't need to understand that fundamentally the 1 is the breakout point, 2 goes back 50 to 70%, and 3 is normally 60% higher than 1. It's like they don't need all that information. All they need to remember is that what goes up is going to come down, and when it comes down, it's going to bounce. So it's like simplifying all the things that people teach so that people actually will follow and do it, because they're not confused or think they don't understand what it means. Because people spend more time trying to understand the underlying purpose versus realizing it doesn't matter, right? You don't need to understand why putting malt or ice in a milkshake makes it better. You just need to add ice and malt. It's not, sometimes the details are not needed. But so that's kind of that's where we're at with Trading 102. It's like, what concepts have you done?
That's how you. Yeah, you're right. That's how you overthink the thing.
Mm-hmm. And then you're sitting there watching it, going, "Well, this looks like a breakout, but the Elliott wave is only 30% of a pullback. So is it going to run here? Is this wave 3 or wave 1, or what wave is this?" And the next thing you know, it's like you're sitting there thinking. You're not like actually going through the other steps of like, well, where's the volume? Where's the retest? I should need to set this up. Okay, what's my leverage? You're sitting there wondering what wave you're in, what this, or well, there's other support, but is that support? Well, that's the 786. Is it inside the golden pocket? Is that the 385, or is that, and the whole time you're just sitting there and you're just confusing yourself. When the reality is, you just need to understand what the majority of people are going to do. They're going to wait for a breakout. They're going to put their orders at the retest, and the third wave is going to be the biggest wave. And if it isn't, that just simply means that people weren't watching that trade and they weren't interested in it. So then you can short it, because they're going to pull it back even further, because the money makers are going to realize that the price was too high for the basic retail investors to care enough to even want to make the trade. That's the reality. That's how easy the concept is. So once you got the concept down, now you're like working inside the parameters of the ideal of everything. Now you can piece together strategies and things that work, and you'll understand why they're working. So you don't have to, question. Like we all came out the womb, and the first thing we always asked was why. Don't touch that. Why? Don't eat that. Why? I mean, we've been doing it our whole life, so we're not going to stop as we get older. That's our number one question. Why? Right?
Yeah.
Like sometimes you hand someone $100 and like, why? Never mind. What a question.
Right.
Why? I used to teach DirecTV how to sell their product, and that's how many years? A while back, and we made them the number one selling service in the country. And I used to love people when they have a cable bill that was like $400, and then they would get it down to $150, and be like, "Why is it so cheap?" I'm like, "Why do you care? Like, what's the point of why?" But it used to fascinate me that people really. I'm like, well, it's really simple. Right now, you're paying this guy money. The reality is the service only costs $30. You're paying the current guy $300. This other guy says, well, hey, if you're going to pay them $300, would you be willing to pay me $150? And you're going to say, well, that's half of what I'm paying, so that's a good deal. And they're going to say, that is a good deal because I'm still making 2 times the money it cost me to give it to you. So I'm going to give you this deal to steal you away from this guy because I want 2 times my money because he's getting 4 times and doesn't respect your business. And that's why you're getting a discount today, sir. Sign here. And they would. And that's what I taught DirecTV and a bunch of companies, how to literally explain it to a guy or a person why they're getting the deal. Because they had to know. Nobody will sign up if they don't understand why. Even if it solves the problem they came. Some people come into like a Sam's Club or a Costco to lower their cable bill, and when they lower it, they're like, why? You came to me. What do you mean why? But that's the secret. Everyone's going to ask why. So you just have to be in the scenario where you understand that's human nature. Now we have to find ways to teach into human nature so that people can be successful at what they want to do. And that's the point of Crypto 102 or Trading 102, is to just explain the why so that people can just start executing versus overthinking. And that is it. That makes sense?
Yep, it does.
So what I want to do now is like to kind of get a basis, and we're going to hop on again tomorrow, is so the reason why I asked you like how long you've been trading and what styles you trade is because the next thing is to go over would be like you explaining kind of like, even if it's through our systems, like, okay, how do you find a trade, right? So when you're looking for a trade, right, what time frame do you do? What makes you look at a chart and go, oh, this is becoming a long, or oh, this could be a short? Like, what are some of the steps? Because I know I talked to Ed earlier today, and Ed had a very specific, like, he had steps to his thing, and I was like, okay, that's easy to fix and easy to help because it's so, he's doing a very specific thing. So when you trade normally, like, I'm a big short person, right? I love to short. And I love maximum shorts because once you see how much it's gone down, then it's going to have to bounce because most people think it's going to. So once they do their bounce, then I can reverse on them again. So it's like a double winner. So when you're looking for a trade, right? So how do you walk me through a little bit here before we get off? When you're doing a long, how do you start off in a long? Like, are you looking time frame wise? What do you normally do?
Yeah, I'm normally on the 15-minute time frame.
Okay.
Because I remember that's what we did, on your system a while ago.
The Academy.
And I know we would.
Yeah, the Academy. We did the 15-minute because we use very high leverage. We were running 70 to 80%.
Yep. Yeah. And so I also look at the the RSI, right?
Mm-hmm.
I'm looking at the RSI to see, has it reset? Is it, and also using the moons to see if, do we have a green moon? Do we have a blue moon? And when I see, if I'm setting up a long and I see that the volume is starting to pick up, and I know for a fact this is where I go wrong, or where I went wrong in a lot of my trades, is because I'm trying to jump ahead of it. I think I'm trying to get the most greediest position, but I don't allow the reset for some reason, and it's like I put my hand on fire, knowing I'm going to burn it every single time. But
Are
I
you
digress.
are you writing down how much? So after you enter, are you writing down how far it goes down every trade?
No, again, one of my problems. So I
Okay.
need to, become consistent with that and just set, um, rules for myself. Hey,
Mm-hmm.
look, this is what you're gonna do. You're gonna write it down. That way, you can also visually see, instead of seeing your losses, visually see what you're doing when you enter, and being able to go back and look at it.
Hmm. Right, because it's
So it's just a matter of being,
accountable.
yes, accountable, consistent, and
Bec-
not trying to uh, avoid FOMO, basically.
The emotions, yeah. So and because that gets to you, FOMO and all the things come into play because you don't have anything to go back and get data. So all you have is
Right,
like what you thought was going to happen, and then thoughts of why it didn't happen. Right? You have nothing to work with. Right? At that point, you have nothing
right.
to build off of, nothing to say, okay, this is what happened, right? And that's the key. So now are you so you're doing the 15 minute. Are you also like the one of the rules that we have is you trade with the 1 hour. So are you doing that as well? Do you check the 1 hour RSI to make sure that's at least heading up?
Yes. However, again, I haven't established myself to understand why the 1 hour affects the 15 minute.
Okay.
Even though I've been doing, like I said, I've been in this a while. I haven't studied it enough or sit down long enough to understand how the 1 hour affects the 15 minute. Does that
Okay.
make sense?
Yeah, so a basic, and we'll do this breakdown here before we get off, but so here's the concept between a 15-minute trade, right? So let's say that we're trading XRP right now, okay? And we decide here that we're going to do a 15-minute trade, right? And we hop on, and right now XRP is doing whatever it's doing. And let's take a look here and kind of just evaluate it. So the first thing you want to do is you slide down to your 15-minute. You see where it's at currently inside of it. Now you can do 15-minute or 10. I like 10 minutes because it gives me a little more detailed. And the other thing is I use um, Hakashi candles, Haikishi, right? The reason why is because the Haikishi, they they're cleaner. They're just they eliminate a lot of noise, right? Now what we do find too is like on the indicators when you change back to candles, sometimes you get an earlier alert because the candle kind of has where it accepts what's happening a lot quicker, where the other candle, the ashi, will be, it needs more data, so it'll kind of put you behind on the eight ball, and that's where kind of using earlier time frames to cross that. But let's just keep that's something we'll get into detail when we start breaking down a little bit more, but let's just go over a basic here. So if I looked at XRP right now, I would go back and I would look, and the first thing I'm going to do is I'm going to look at like what happened. So we've seen a big push. Now we've seen this steady decline, which was basically a pullback, right? So now if we slide in here and I start to see where I'm at, all I'm going to do is say, am I in a cluster here, right? Or a parallel channel? So the first thing is you can look here and you can, kind of go across. I'm on the 10-minute time frame. I can see over here that there was an area of support and resistance prior that big breakout, and now we're kind of right back to that same area, and then I can kind of see where there was some tops and support. So I want to find that little mesh area, and that's kind of where we're at now. This is had higher candles up in this area here, so what we're doing is we're just going to move the top up and then use that middle to find those areas where there was middle bounces or pullbacks to get our line set up. And I'll show you here with the arrows. You see like how it's creating that right there. So that's where we can make a taller parallel channel. Now the next thing I'm going to do here is I'm going to measure the parallel channel before I even do anything, because I need to make sure that if I'm trading in this parallel channel, that the percentages are actually something I can make money on, right? So this is where the system comes into play. If I'm doing a 10x and I have a 2% move, it's not going to be really worth my while. I need more of a 4 to 6%. But if I'm using 40% and I get a 1% move, then I'm in good conditions. This has a channel of about 2.5, maybe 3. So cut that in half. That's about a 1.25. So we're sitting at about a 1.5% move each way, which is okay if we're going to use a 40x leverage or a 30x leverage to get us, 25 to 30% on $1,000 bag, right? So now that we have that set up, we can say, okay, this isn't bad. This looks all right. Here we go. So now that I have that set up, the very first thing I do is, now that I have my parallel channels set up here where I know where I'm operating out of support and resistance, now what I'm going to do is basically say, okay, the only options here, which is kind of cool once you understand what you're looking at, is that it's either going to break above here and then retest and then go long, which would be the breakout, the retest, the long, the 1, 2, 3, or it's going to break below, it's going to retest and then go down, right? That's the two options it has. Now that I know that, now I go to the bigger time frames, and this is where understanding using the 1 hour is that we want to trade with the 1 hour. Now, what the RSI is, right? And this is where some people, when they say, well, I don't understand, the RSI was going up. The RSI is simply what's called sentiment, right? So when you hear people say sentiments, right? Like, oh, the sentiment of this coin is that the public is this, right? The sentiment just means what the public is doing, right? And this is just simply, the blue line is buyers and the red line are sellers. So this just tells you what there's most of. So if the RSI is heading up, that means the sentiment currently is that people are buying this coin. Now, does that mean it'll actually go up? No, because you don't know if there's 1 million people buying $1 or if there's 1,000 people buying $2,000 each, right? That's why we have the moon indicator, because the moon indicator is going to show you the money. Now, what you can see right here is that the money is starting to go slow on the 1 hour. You see that, how it's going sideways?
Yeah.
So normally when we see this, we want to see a push, we want to see a pullback, which we have, and then that's where we want to see this start to like break out, right? Now, this is why we have that rule that we want the volume to actually, that's why we have this parallel, this peripheral line here, the 10 threshold, right? The 10 threshold is to let us know when the volume is at a level that is going to stay consistent, meaning that once people start putting money in, that means that the whales are in, the retail's in, and then that's where they let it run because it has a solid floor. You see what I'm saying? You want to be trading where there's a floor, not a chance for a gap, right? So right here you can see it's getting weak. So I can already tell here that right now that middle section that it's trying to hold there is probably going to fall short. So more than likely, the very first move we're probably going to see is down to this support. Okay? Just by looking at the 1 hour value.
Yeah.
Right? So now that I have that, now I'm going to say, okay, this looks weak, right? So now the odds are is that this is probably going to pull back. This would probably be a good short to get into, because we can see right now that looking at the candles, if we go back to our 10-minute section, we're right in the area of that. See that peak where that big candle, see how long that neck is, that wick? That means there was a big push of what they call a hurrah, and then it had a big pullback, meaning that they're filling orders and it's getting weaker. So if we looked at all these big wicks here, right? Wick, you can see how much it's pulling back, more than 50%. So when it has this big one, that normally to me would trigger to me to say, okay, I'm going to short this candle here, right? And I'm going to start my short from this area down, because I already see the weakness in there. So now all I have to do is confirm whether that makes sense. And how to do that is to find the weakness, right? So the very first thing is, that's why we always have you can look at the daily, right? So if you look at the daily, you can see on the daily right here that overall the sentiment is what? Down, right? Then you look at the moon, you look at the volume. Look at how the volume has been sideways the entire time over the last 4 or 5 days. Right? Basically concluding that there's no money here. Right? So more than likely, you're not going to get really big bounces here. So that means the bounces are probably going to be the keys to short, because there's no volume behind them to stay. So it's like a snowball that's slowly starting down the hill. Right? So now that I know the sentiment for the day and the week, I know that my biggest time frames are against my long position. So now I go to the 4 hour and say, okay, let's see if we can catch a bounce. So now if I looked at the bounces, right, I have very specific bounces here. Here's the 4 hour RSI. What do we normally do? When it breaks up towards the 20, that is normally going to be the time that we look for a long, right? So what is our student trade? Our student trade is very simple. The student trade is when the 2 hour breaks to 20 and the 4 hour starts to head up. That's our entry point, right? Then you had the move that happened, right? So you had the first move up from that situation. Then we had the pullback. And then we had the next move, which would be this candle here, which would represent the upward move. So you have this is the third move up right there. See? I'm going to hit this text real quick. Setting. This is the third move up 4 hour. Okay? Then I'm going to put let's see here. We'll take this candle here. Setting. And this is the 4 hour up. Now, we all know that the student trade is that the 2 hour has to be breaking the 20. So if we go over here and take a look, now we can see that right here, the 2 hour broke up, and you would know about it right here. And we'll make this color orange. And this is the 2 hour candle breaking up, right? So now, and you're never going to, so the when people say lag, it's because this line isn't going to show up. You see it at the 20, but it's going to pop here. The next one is when you're going to see it. So that's where you'll actually, so at 7 o'clock on my time frame, 7 a.m., I would have saw this candle. Then the 4 hour broke here, and then we have that matched up. So now that I have that there, I can go back, and then I also have this is the start of the first move up. We know there's going to be a pullback, which happens here. And then what we're looking for is the next, move up. And I'll move this. Oh, let me put that back because that was the 4 hour. And this is all based on the 4 hour. Okay. So this line here is the third move up on the 4 hour. Okay. Which is this white candle. So now that we have that information, right, that is a strategy. Okay. So now let's take that strategy. What's the strategy? The 2 hour breaking above the 20. The 4 hour hitting the 20. The 1, 2, 4 hour heading back up on the third move. So we have this as a move, this as a move, and this is our third move. That make sense?
Yeah, it does.
Okay. So now I can take this, just focus on this. I don't need that stuff. I don't need my candles anymore, right? So now all I have to do is slide over and say, okay, during this time this is happening, I can go to my 1 hour setting, right? And I can say, okay, we always have a rule. The rule is trade with the 1 hour. Now, when all these things were happening, notice that the 1 hour started up at this point. And I'm going to make this candle pink. And this is where the 1 hour started up. And then over here, when the pullback came and it started up, now at this point, when the startup happened, you can see that the 1 hour had already started up here, right? So those are the two areas that if we were looking at these trades, the 1 hour is trending up at that time, okay? So those are basic fundamentals of how to use the RSI in coordinates with a strategy. That makes sense? Thanks for the hat and mustache, man. Appreciate you. That makes sense? So here's the 1 hour headed up on the RSI. So that clears us for a long. Here's the 2 hour
Yeah.
breaking the 20. Here's the 4 hour breaking hitting the 20. And here's our first move up, our second wave, and then this is our third move up. And the 1 hour is saying that on that third move up, though it's heading up, so that would allow us to take a long at that position. That makes sense?
Okay. So I know myself probably would have thought the third move up would have been just to the left of that
I remember
red arrow.
we're looking at the 4 hour. So you see how the 4 hour here? So this is the 4 hour, and
Got it.
the
Okay.
4 hour, when it moves up, you're not going to see it move up until it prints, right?
Got
Which
it.
would be right on that red, same as the red candle. So when it prints up, it's going to be exactly the same as that red candle right there. Because you're not going to see it when it's heading down, you're going to see it when it does that.
Yeah.
So now when we go to the 1 hour, we're going to see the same scenario. You can see the 1 hour started up just slightly before it. So at 5 a.m. it started up. The 4 hour started up at 7 a.m. So now we can slide this over here. Now we can go back to our 10-minute, right? Because that's where, when we see these moves happen, this is where we would decide, now that we have that strategy, now it would basically be, okay, the strategy is the 2 hours headed up, right, which happens here. The 4 hours headed up, which happens here. Now, with that being in the progress, we know that we're looking for a trade in this area. So now all I have to do is, once we have that strategy happening, right, we can turn around, grab a parallel channel. We would be somewhere around here. And during the 10-minute, we would simply go, oh, everything's starting to head up. Let me draw my parallel channel. Let me see where this coin is currently, right? So when we draw this channel, we can see that we've had these moves where these wicks over here have hit these tops. And now we have it all set up to where here's our top position. Here's our middle positions showing support. Here's our lower position, right? And now we have top, middle, bottom. That makes sense?
Yeah.
Now, what we look for, that we have all these things happening, is since the 4 hour starts to go up here, right? Right on this candle, and we'll turn it green because that's when we see the 4 hours start to head up. This is where we could say to ourselves, if this is our trade strategy, then that's where we would say, okay, I'm going to put my buy in on the support. See? So now your support goes in here, and now your entry's on the support. See how that works?
Yeah.
So, and you hit it right there, and then you also hit it right here. So both times you got your entry to your long, which would then ended up being in this huge trade. See how that worked?
Yeah. Yeah.
So that's why when you like, this is a strategy, right? The other strategies that we look at is we look for what would be like breakouts, right? So a lot of times this support and resistance on a 10-minute would probably be down on the top of these candles here, not the wicks, right? So then the scenario would be this. You would wait for it to break structure, right? Which what we see right here, right? So we see right here it breaks up and you see the candle above it. So once that breaks out, your next entry would be on that the resistance that it just broke, which it does hit right here. See? There's your next long position. See how that worked?
Yeah, I see it.
VC, can you show me how that green arrow looks on the 4 hour?
What do you want to see on the 4 hour?
That long green arrow. Let me see
Oh,
what
yeah,
it
yeah.
looks like on the 4 hour.
So on the 4 hour, we'll pull it back up here. And that's going to be on the so remember the steps to this is the student trade, right? That's what we call the student trade. So the student trade, this is an easy trade. If that's what everyone should be doing anyways. They should basically be this. See, when you move this to the left, right? That's the 4 hours to the left. So that was 5 o'clock. When you move it to the next left at 9 o'clock, that's when that would actually have printed. So you wouldn't have seen it break the 20 until it actually went past. That makes sense? So right before that happened, it's a time frame where it doesn't show you. So when it was this particular candle right here, this one right here, this doesn't happen. It prints on the next 4 hour candle, which happens to be where the green is. Does that make sense now? So when it printed over here, and that's why we put that arrow there, because that's where the 4 hour broke the 20 and started headed up. That makes sense?
Right.
The orange is where the 2 hour, right? So if we go to the 2 hour, you're going to see that that's where the 2 hour broke up. And once again, you're not going to see the 2 hour. So you're going to see right there, the 2 hours down, and then right there you see it hits the 20. The next is where it breaks the 20. And we put it where it breaks the 20 because we don't want it to get rejected from the 20 and head back down. So we're just using that as more confirmation. So that's where we get the orange here for the 2 hour. And now on the 4 hour 1, 2, 3 move, where we put the white candles at, is right here. So we have the 4 hour break up. So we have the move to the top. Then the 4 hours starts to head back down. And then right when it starts to head back up again, that's where we see this right here. Is you wouldn't see it right there because it's not up yet. But when it prints, it'll be right there. And that right there is the third move up for our 1, 2, 3 for our 4 hour, which happens right here. And that's why we have these two candles here, because that's, remember, it's the last move up, right? So let's go back to the chart on what we're looking at. So we just saw two ways that we could have made this trade, right? The first way is following the basic student trade, where once the, we see the 4 hour do what it's doing and the 2 hour do what it's doing, then we're just in a position to hop in this trade, and we just set our entry on the support area, because the odds of it going lower are not that great, because we've already know there's a 1 hour headed up with the red arrow, right? We have the 2 hour headed up with the orange arrow, and then we have the 4 hour confirming value. So the odds of it going lower than its current support area, which is literally these wicks right here, right, is very low, right? So you can calculate this. Something else you can do is you can go here, grab a long position and say, okay, well, this lowest wick is here. So if I calculated from where, remember that at the current time, the candle that you're looking at is that candle right there. Would be that candle right there. So if it did pull back all the way to that lowest wick, which would be right here, that means that if I measure this out and I was, going to my support area of 3162 and I measured it to that lowest wick, right? See how it says right there? It says 0.15. You see that? Or 0.51. You see that right there? You see how the downside is 0.51. So mathematically, this is where the systems come into play, right? So let's say if I'm doing a 50x on this trade and it pulls back 0.5%. Let's say it goes down to that lowest wick that hit, that random low wick. That means that my possible stop loss is going to hit 25. So I would have to set my stop loss to 30. Does that make sense? If I'm going to use 50x leverage. Because if it pulls back that 0.5% and it does go all the way down to that wick, well then I'm gonna be down 25%. Does that make sense? 50x leverage on a 0.5% is 25%, right? So now I know where my stop loss needs to be. So I need to be willing to lose 35% on this move. Does that make sense?
Yeah.
If I entered where that top candle is. Now, luckily, we decide that we're going to move down to the support area instead, right? Now, from that support area, that's that 0.5%. So now I have a choice. Do I stay with my support area and then put a 30%, 35% stop loss, right? Because it could go further. Or do I say, let me split the difference and I move my entry almost slightly down and I say, you know what? I'm going to split the possibilities of it and I'm going to move my entry down here. Does that make sense? And what that does is it's you take a little bit off of your, you say instead of, going at 50% or a 0.5%, I'm going to move it down to maybe like 0.35. So that way I can keep my stop loss at 30 because out of the 1,000, I'm only willing to lose 300. Does that make sense?
Yeah. Yeah, that's a good way to risk management.
Correct. Because you got to remember that if your system is saying this, I'm willing to lose $300 4 times out of 10 as long as I can win $600 6 out of 10. That make sense?
Yeah.
So this is part of, developing the system and the leverages. Now the other thing is, let's say that I don't want to take the risk that it doesn't go down that far. Maybe I think the volume's too strong and I want to keep my entry at the support area, right? All I have to do is adjust my leverage from 50 to 40.
Wait, VC, can you say that one more time?
Okay. So the original ideal or concept is that we're using a 50x leverage, which means if it pulls back a 0.5%, I'm at risk of losing 25 to 30%, which is very close to having a 30% stop loss, which is what I'm going to have. I don't want to be that close on my odds. So then I move my entry down a little bit to increase the margin that it can go down. So that way I have a better stop loss percentage of it needing to go further, right? So it's like increasing So now, instead of that, I might say, well, I don't want to take the risk of not, maybe it just hits the support and jumps. Maybe it doesn't go down that extra 0.1%, right? So I'm going to keep my entry at the support at 31.62. But what I'm going
just
reduce my leverage to 40.
Yeah.
Which means if the 40 goes down a 0.5%, that's only 20.
Okay.
You see what I'm saying?
Yeah.
So essentially, the lower your leverage, the longer you can survive.
Yes.
Trade. Okay.
Yeah.
Right? And this is why it's so important to, once you find a strategy, to understand what is the average percentage on your strategy based on whatever time frames you're using. What is the average percent of the move up do you get? Because if you're averaging 1 to 2% on your ups, well, then you have a really shitty strategy that goes nowhere. And, because you always have to, whatever it does on average, you can only guarantee half of that. So if it only goes up 2 to 3% on average, that means you can only count on 1.5. So if you have a 1.5, then you have to say to yourself, well, in order to get my 30%, I'm going to have to at least do 30x. Because if it only goes up 1%, I will at least get 30%. See what I'm saying? That's why when I show you guys channels and areas that we're doing clusters, it's trading from the bottom to the top has to be at least 3% or 2.5%, because we need at least 1% times 30 to get our 30% profit. You see what I'm saying? That makes sense?
Yes.
So my basic leverage at 30x has to have a move that averages 2%, because if I only get half of that, it's still 1. 1 times 30 is my 30%. If it goes terrible, I make 15 or 20% and I get out. You see what I'm saying?
Now, when you say if it does terrible, you make
so let's
20%.
Yeah, because to get better, and this is just like advancement, right? So let's say that you set up a trade and you got a 30% stop loss and you got a 30% take profit. And the rule is this: when the trade gets to 20%, you should move your stop loss to even.
Right. Okay. It took me a second. Now I see what you're saying. Okay. Yeah.
And if you start to recognize that it's starting to get weak and it's at 23, 24%, and you say, you know what? Just let me take this 150.
Yeah.
Because it's not doing what I wanted it to do the way I wanted it. So I'm not going to take the risk of letting it run. I'm just going to walk away with 15% and then reset up. Because sometimes that's considered a loss to me, but that's considered breaking even. You see?
Yeah, okay.
Remember, like poker, when you lose a hand, the only thing that matters is you don't lose a lot.
Yeah, and in that scenario, you really don't lose anything technically because you hit your entry.
Yeah.
You know what I'm saying?
Exactly.
You know? Yeah, okay.
And if it goes back down, you're just losing your fee to trade, which is like 10%. So if you lose, if you can limit your 5, let's say you trade and your average wins is 5 out of 10. And 5 of the losses, you break even, right? At the end of the day, that's only 10% per loss. That's 50%. And your average wins are 30. And you have 5 trades that hit 30, right? Let's say you're not even letting them go 60 or whatever. You're just doing the worst. You're the worst trader out there, right? At the end of the day, you've got 30% times 5. That's 150%. The 50% covers your losses, and now you've doubled your bag. Because you have 5 trades doing 30. 5 times 3, 150%. 50% covers the 50% of losses that you broke even on.
Right. And then the 100 doubled it. Yeah.
Worst case scenario, you only made 50%. But if you're doing $1,000 bag, that means you did 10 trades this week. You made $500. You're the worst trader of the week. See what I'm saying?
Yeah.
When you understand the mathematics and equations to the system, it's literally impossible to lose at this. Once you build strategies and find strategies that produce, on the average or law of average, 2 to 6% gains. That make sense?
Yeah, it does.
So what you're doing is you're building a strategy into a system that has a law of average of 7 out of 10 win rate at a certain percent. And then the loss rate is half. You're taking half of what it normally does. So instead of 2%, you're banking on 1%, and then you're using the leverage to get that 30% out of that trade. So some of those trades which would have been losers, you have it set up where you're taking 30. You're not looking for 60, so you won anyways. Or you took 20 because it didn't do what you wanted. But at the end of the day, you eliminate those 3 losses, and you become completely winning. You win everything. It's just some of the wins are lower than your average of 30, which bring your percent down. Let's say it brings it down to 20% average. Well, 20% average on $1,000 on 10 trades is what?
200.
Exactly. So you got 10 trades that made $200. How's your life this week? You made $2,000. Yeah. It was a bad week. I made 2,000.
Yeah.
But you see how those concepts, once you start understanding the basic mathematics and the system, right? Then you build the strategy into the system. The reason why everybody fails is because they build strategies without the system and then never figure out why their strategies aren't profitable. It's because they don't have a system. So let's finish this trade out. So that's where we would get our entry here, or you wait for the breakout and you get your entry there, which is what we always teach. We teach the one move up, pull back, then the trade up, right?
Third's the biggest, right?
Yeah. So now let's go over here and let's take a look where we can see if these other candles come in, and let's see if they were marked. Okay. So now here we find out that this is our trade where we had the 4 hour go up. We had the 4 hour come down. And this is the RSI. And this is where it triggered the 4 hour move up. Okay. So now we go back and we look and we're like, all right, so here's the 1 hour headed up. We get a 3 hour move, a 4 hour actually showing that it's moving up, right? Now we get here and we realize it just triggered this move up, and we look and we realize that we've already had this move, right? We see this big move already happen. And now we're like, oh, okay. So now we already know that the push happened, and now what we're expecting is for this to actually have a move that where it goes up, right? Because now it's supposed to be at the third leg, which is it's the strongest leg. Technically, it's supposed to have the biggest move, right? So now if we go across and we say, okay, well, where's our double top? Here's our first move. Here's our second move, right? This move is supposed to break above this move. Now that we're looking at it, we realize if we're watching this, we're realizing that what are we doing? We're getting no volume here, right? This is slowly going down. There's no volume here, right? So now at that point, what do we start realizing? Now we put up our parallel channel again, right? And we realize that this is supposed to be a breakout. But instead of breaking out, what do we have? We have sideways movement. Yeah. So at this point, we have all these little signs that says up, didn't break out, up, rejected again. Maybe if it doesn't do what it's supposed to do, what is it going to do?
Yeah.
Mm-hmm.
And we know that because this is already the third move. This is the big one. All it did was create a double top. So what are we looking for? We look for the channel again. And then once again, we set up our channel, and now it's like, okay, where do I set my entries? I got one rejection, two rejections. Okay, I'm setting up here for short positions. Now the odds are in my favor, and I'm sure if we go and look at all the moons and everything, we'll find a reason why this actually was going the other direction. But just based on the basic rules of the trade, we know right here that if it doesn't do what it's supposed to do, then what will it do? The opposite. Because all that happened here was the money ran out. The people who didn't sell on that first push sold on the second, and then they sold on the third, right? And then they panicked on the fourth one, which is this one right there, and that's why it dumped, because the market makers realized there was no more money. And that's your downward move.
And that'd be a great short.
Yeah. But see, that's what we're doing is we're just basically taking into very simple concepts here. That if it's not going to be the big third leg like it's supposed to, and it's already, falling short on every position, that means they're panic selling, right? This is the end of the money. So we need to position ourselves on the resistance level and look for that short. Now, if we go back and we look at all the scenarios, like why would we, pull a short here? I mean, we could turn around. Let me get rid of this, and then I'm going to put a red arrow here, a red arrow here, and then a red arrow here. So this is all the positions here that we can see that's where we could start looking short, right? So if we go into here, we can see a couple things. One is if we're looking at the 10-minute, which is smaller time frames, more information, we can see there was a huge fluctuation of volume right there, right? So now we know that in this area we had a big push of volume, and then what happened? We got a blue moon, right? And then as we go through the blue moon, the volume starts to disappear. Look how it fell below the 10 line. You see that? So now it's below the 10 line, and then you get a green moon. What should happen when the green moon comes?
A bounce.
Should be a bounce. What doesn't happen? The bounce. You see?
Right.
It doesn't break above the level. The volume doesn't go back above 10. You see? So then we know that we should be looking for what? The short.
Short.
That's one sign. And this is on the time frame you want to be looking at, because the 10 is showing you the money. Look how fast the money is dissipated. So what is this? If we look at it again and we go, okay, we had a pullback. We had our bounce, and the bounce wasn't that great. So what's going to happen? It's going to go down. The 1, 2, 3. So we see all that happen in real time, right? We have our blue moon, it pulls back, right? We look for the green moon. What's the green moon supposed to do? It's supposed to bounce up. Doesn't even bounce, so what does that mean? Third move is down. Now let's go to the volume. Let's go down to the RSI. So now if we go to the RSI, let's look at the 1 hour. Let's find this down moon. So now we look at the 1 hour, right? See how the arrow is going down here? What's the 1 hour doing?
Pulling back.
Yeah. So when did the 1 hour start to pull back? It started to pull back here. So now if we go back up here and we follow that 1 hour up, we notice that the 1 hour was giving us a hint that it was starting to pull back all the way back to this candle here. So now if we go back to the 10-minute, we can see here that this is the 1 hour. 1 hour heading down. And that was the first sign. So when you've seen that first bounce and it started to head down and it bounced again, that's where you should start thinking short. And then when it bounced off the support line and came back up over here, that's where we enter. Why? Because we need a 1, 2, 3. Here's the 1 hour headed down. What do we need? We need a pullback. What do we need from a pullback? We need the bounce. What happens after the bounce? 1, 2, 3. So that's why having these simple rules allow us to be very we don't have to overthink this. We're watching it right in front of our face. We just need to implement these rules and these steps every single time until we can see if there's anything that we can add to them or improve to them that allows us to be even better at what we do. That make sense? You guys see how that worked?
Yeah. Especially so for me, I don't know about anybody else in here. Like when you're explaining it, showing it, I'm locked in. I got it. Second I turn that shit on and I'm by myself, I'm like, damn, what the hell did he say?
Yeah.
Right?
Well, that's why.
Right.
That's why we're keeping the fundamentals. That's why Trading 102 is completely different than anything we've ever done, because it's really just volume, 1, 2, 3, and the entries. That's it.
Okay. So with the Discord, there's a ton of information in there, and
so all this right here.
Huh?
Yeah. So what we're going to do is on here, and I'll show you right here. So let me change stream. Let me go to Discord. Okay. So now you guys can see the Discord, right? So what we're going to do here is I started deleting and removing files already because we have a lot of things in like student edu, and this is mostly for new students coming in because everyone, like I said, they're all learning things, right? This is the 1 2 3 entries, right? 1 hour time frames, 4 hour, and we're going to go through all these and see what it is. But you'll see as you go down, there's going to be a section here that's going to be crypto 102. You see? And then crypto 102, we'll get a folder of lessons, right? And this will be where the YouTube channels are for you guys to go back and watch, and the concepts, right? So as we build this, it'll go into here, and basically introduction. This is where the only folders that you'll need to literally go into and watch, because this is all you're doing. Trade reviews.
VC, maybe you should have an archive folder. I do like watching those old videos.
Yeah. They're going to still be there, because what you're going to have is, when new students come in, remember, not everyone's taking this course, right? This is a different course. You guys are paying for your course. So this is the 102, right? Very specific, one-on-one, how you trade, building your strategy, creating your trading strategy, creating it the way that makes sense to you, and then making sure that you guys execute your trades that you're thinking of, tracking the trades that you're thinking of, going over the results of the trades that you're doing, every single trade, right? That's the point of it. That way you have dedicated time to where when you make a trade, we review the trade, we track the trade, we go over the data together. You're going to learn how to evaluate your trading, your skills, your strategies, your entries, how to adjust them, and how to build a system. And then, right, the first thing is system. Once you build the system, then you build the strategies into the system. And then you can adjust the system for your strategies, right? That's why we're doing this course. This course is to take people and do the one-on-ones, where it's like, all right, this is the master course. This is where we hold you accountable. This is where we make sure you are tracking your trades, doing the data, not trading with emotion, understanding why you're making a trade, right? It's like university, making sure you do your homework, grading your homework. Like, this is how we do it, right? That's why you pay the money. Now you have someone you need to be held accountable. You need to break your bad habits. You can't break your bad habits in a day. It's going to take a minute, right? But if you're constantly in classes, constantly looking at something, and all you have is this steps, it's just going to become what you do. It is what we do. It's just how we do it. There's nothing else to it. And when something else comes in, we break that down and go, how do we implement our steps into this thought process? Not the other way. So that's what Trading 102 is all about, is just silencing the noise and getting one-on-one, tracking the trade, tracking the steps, building the system, understanding the concepts of the system, so that you understand why everything happens, because it's why, and now you have that, and you can build from that, grow from that, and when you're done with this, that you're like, man, yeah, this is all I do. It's the workflow. I don't deviate from what I do, because it's all I need. It's just how it is. This is how much flour goes in. This is how much butter goes in. This is how the temperature I bake. These are the minutes I bake. All I do is repeat the process that is successful. That is it. So you'll have the 102s. So now the beautiful thing is that we can go into the EDOs and look at strategies and look at these other things, and then break them down and implement your system that we've developed for you and your strategies, so that you understand how to execute these other things that are happening. You see what I'm saying? The time frames that you're on, the strategies that we're doing. Right now, we just took the basic system and strategy and broke it down on the basic student 4-hour trade. You're going to learn how to break it down on the 4-hour, the 1 hour, and the 30-minute. And then you're going to understand which system you're using, what leverage you're using, what's the point of your use, what's your target, what profit are you taking, what's your goal, and how many of these trades you need to do, how many ways to do the trade, and you're going to hit your goals of what you want to make weekly. So that you walk out of this at the end of 4 months, you'll understand what you're trying to do daily, how many trades you're going to make, how much you're making, and then the next 4 months is just making that happen. And then getting even better at executing, raising bags, making more. Fundamentally sound.
All right. Yeah, that sounds exciting.
Yeah, it's that's why I say, when I say we got 10 spots open, because it takes, normally we'll get a little more, but in the beginning it's like it all depends on who's in front of you. Some people need a little more time. Some people are like, nah, I got this. And they just lock in, right? But it's about being able to lock in, because you also need a group where it's like, man, 1, 2, 3. And you can look at each other's trades and be like, oh, you missed that 1, 2, 3 right there. And you're like, oh, shit, right? Because down the road, you want a group of people where you're all looking at trades and you're like, yo, look at this. And the other guy's like, oh, yeah, look at, and then boom, you've solved the equation.
Yeah.
Now you're working smarter, not harder. You'll get more trades, valuable trades. You'll understand the trade because he's doing the same system you're doing. Very simple. 1, 2, 3, volume. 1, 2, 3, right? Best entry. What's the percentile? What leverage am I using? What my bag is, right? And you'll be able to solve that yourself and say like, oh, what's your leverage? What's your bag? You already know what yours is. There is no anxiety. There is no guessing. You already have it all set. And that'll all go into the 102 folder. Simple execution is the only thing that's needed. Because the rest of it is, we're always going to have people come in with, hey, I saw this new strategy. Hey, I tried this new indicator. Hey, this is, you know what I'm saying? And what you guys will become is someone who can take a new system and go, oh, that is pretty interesting. But you know what? You know what they're missing? They're missing this. And then you become the person who solves everyone's problem. Like, you guys are just entering too early. Why are you entering without money? Why don't you let this happen? So then you become the person who's like, oh, that was a good way to find a trade, but you need to understand how to enter that trade. And then your strategies will fit right into them. You see what I'm saying? It'll be, you are who you are. Everything that shows up in front of you won't change how you execute. It'll just make things interesting for you for a little while. That's the goal, to turn you into, like a Marine, a trading Marine. Like, you are what you are. You're the Navy SEAL of this shit. You only know what you know. Doesn't matter what weapon they hand you, they're all the same, and they're a weapon. No anxiety, no feelings, just steps. Just
right. That's the whole purpose of boot camp, is to provide you a different mind frame.
Yeah.
Mindset.
Yeah. Boot camp we do where we just we teach a very simple lesson like, hey, just focus on getting rid of emotions. Like, that's an easy thing. The master course is going to be boot camp. Then it's going to be, long-term positions. It's going to be what leverages, what percentages, what size of my bag, how I make 50 to 100,000 a year. What's my next level of that? What's the goal here? The goal is to have $10,000 bags doing 15% trades 10 times a week. That's 15 grand.
Right, and then with that amount of money, you don't need a high leverage to,
right.
to meet the goal.
You don't even need the coin to really move.
Right.
Once you master 3 to 6% moves, and now you only need 1% at 10%. I mean, shit, it's $1,000. That's child's play. It could do 25% of what it's supposed to do, and I will still be successful. my odds are 75% better than yours. That's the beauty of it. That makes sense? Pretty simple, right? So that's what, right.
Are you kicking off tomorrow?
Yeah. So I'm gonna hop off and give you a call, man, and get you all squared away. Ed's already, Ed's getting himself all set up. Ed's in here, and then we got Joey C coming in. So guys, if you, so I'll give you a buzz after this, and we'll get that all squared. You're good, brother. And then.